As we are, over the last 10 years, a dominant player in Central Europe in retail, I can report that we are back on the radar even in secondary cities. We signed yesterday night a deal, so there's a reference already in a secondary city in Poland, a decent deal, and we are, from the financing perspective, doing that leveraged on a 50% basis. So this is the average, more or less. These days, 50% debt, 50% equity. There are always some exceptions. If it's really that prime dominant thing in inner city Warsaw retail, it might be even a little bit higher.
If it's not bought by Unibail, Damco or Union.
Thanks for this remark. And also the last 18 months, we have been investing equity only into industrial sites, in the distribution centers in Warsaw, Manhattan Distribution Center and Warsaw Distribution Center. So Central European area is back on the radar. It's not only the really big secondary cities, we even look to the tertiary cities, as long as it's dominant, that you really have the best dominant retail box or shopping center in town, then we even go to tertiary cities these days already.
Well, the frustrations of not being able to acquire big prime dominant, there is a lot of capital now, and like looking at the smaller cities, even down to 100,000 population towns, 200,000. Just as Martin said, if it's the dominant place in town, and there's very unlikely to be other competition or new development coming into that town, it's a very secure buy. There's numerous investors looking for those opportunities. They're not easy to find, to have a dominant small town city centre. And the yield certainly is around about the 8%. So you can almost say it's even more. 6% or under is, let's call it super prime, the big German assets. But small towns, it's 7.75, 8. There's a portfolio out of the market at the moment where they were talking about sub 8%, but they know exactly that they won't get sub 8%. It'll be 8.25%. So, and that's 5 schemes in a portfolio deal.
And how does that compare, let's say, between, because a lot of the investment goes into Poland and Czech, how does secondary locations there compare with, say, looking at Budapest or looking into Romania or further in terms of the less loved countries? Yeah.
Generally, we normally say it's about 150 basis point shift. Prime Warsaw or prime Wrocław, Katowice, say the 6%. It's then in Budapest at best is 7.5%. The challenge, though, is the capital allocated into those markets. And if it's prime, it's then a big dominant scheme, and then it's a high volume deal. So it's then where's the capital coming from to allocate that amount of volume into Budapest, Bucharest? There have been some transactions sort of muted and ongoing, but it's certainly around 150 basis points, sometimes more.
But everybody's focused on Poland, and you see it in the numbers in terms of the trading volumes. And if you took Russia out, I think it was 60% on your chart, and that is what it is. Hungary and the Czech Republic, they're both small countries, 8-10 million population bases. You get outside of Prague and Budapest, and you're real secondary, real fast. And I'd say the spreads are, I won't even play around with it, but there's just not, it's a very, very shallow universe of someone who's going to write a check for Olomouc or Strava, Brno, and Bruno's 350,000 people or something like that, 300,000 people, and it's not a small city, but you really don't have an active market.
Yeah, the capital is not there. It's Poland, it's regional cities, and then it's Prague. It's not Czech Republic, it's generally Prague. And Jeff, my colleague who's based in Prague, he fills out, and there's little money looking out in those smaller cities.